All right, with the stock market rolling over, I thought it would be a perfect time to bring on a US investing champion from 2019, Leif Soreide, to talk about exactly how to short in this market. Leif, thank you for joining us today. We're really excited to learn from you.
Hey, thanks for having me, Nick. And it was great to see you out in Vegas. You and Richard, we spent some time together, hanging out and stuff. So that was a lot of fun. Everybody there really got along well. So that was surprising. And hopefully that gets set up again. So we all get together like that.
Absolutely. Yeah, that was a really great time. Here's a picture of Leif giving his presentation in the FinTwit conference that we had in Vegas. Leif has a MBA in finance. Like I said, he's the 2019 US investing champion, and he's founder of his own trading team, the Champion Team Trading, which I was a part of in September of 2020 to 2021, which I found extremely valuable, especially where I was at that point in my trading career. Lots of great learning material that he puts out there.
Thanks. I'm glad you learned something, and you're off to doing all these cool videos on TikTok and stuff. So maybe I finally make it on TikTok.
Yeah, we'll definitely be clipping this up and using this for some more short-term content. Next to the agenda, this is what we'll be covering in today's video: exactly how to short and what makes a high quality or high probability short setup, including market conditions, group themes, stage analysis, some short setups like earning pivots and earning disappointments. And then Leif will walk through a couple of examples using exactly where he entered the stock or entered the short position, where he would put his stop placement, and kind of expectations of the trade, because it's not the same as going long a stock. We were very spoiled in 2020. We could just buy the dip and we would be rewarded for it, and there's nice strong uptrends. But shorting is a little bit different. We don't have that unlimited upside. And Leif will get into that. He's the expert here. But
yeah, 2020 was rockets only. Now it's kind of duds only. So it's shorts only.
Exactly. Yeah, you got to act a little bit quicker. And if you guys enjoyed this video, please leave a like and subscribe to my channel. I make trading videos like this along with other personal finance content. With that said, Leif, I'm going to hand it over to you, and we'll go through what you have to show.
First of all, you want to be in step with the market. And right now, the market, if you see here, the S&P 500 is an overall head and shoulders type pattern, maybe two right shoulders. Maybe you want to troll me and say that's not technically a head and shoulders or something like that. Let's just say it's the spirit of one, right? I mean, it's kind of, let's go with that. And then you want to judge kind of the overall health of each bounce and roll, right? So you got the shoulder roll, this big right shoulder. I mean, you only got basically like one net high here on the NASDAQ. And you never got any highs on this last roll here. So I was putting the odds to the downside. There's, I don't know anything for sure, but I start to, put odds in different directions, and they only go slightly in either, if you have an edge and you're reading everything correctly along with the stocks, see how they're all setting up. That's going to help your situation there. So checking the overall breadth too, you want to see the stocks kind of in uptrends. There's a lot of ways to do that, and you can kind of have your own trend criteria, what sets up in the trend for your market cap and all other criteria, and keep an honest count, an even count of that. And if those stocks are kind of increasing, then you're having a healthier market. But as the market kind of topped out there, before it even topped out, the stocks in the uptrend, which we just use a 200-day moving average filter, started to disappear here. Is the S&P 500 is finally down to 27% or so of stocks over the 200-day moving average. And, I kind of have these washout levels sort of marked here, and the NASDAQ's already hit that. But the other NYSE and the S&P 500 are, still have a little bit of room to go before there's some kind of panic. And it doesn't have to happen, and it doesn't have to be a VIX spike. Nothing has to be any certain way. But, in general, I expect, some kind of panic or something at some point. We don't have a black swan type of market here, but it's just kind of overall slower, natural, choppier decline. And, so that's just the read of the market there. Something from the platform too, I just put up here was the, judging to see if the market's going to roll at this last roll. And, it kind of rolled at the 200-day moving average, of course, and on the Qs there, the 100, the Amazon, Google, Microsoft, you want to look at the underlying and see how they're acting. And then, they get a little wedged up and they got a little stuck with this roll, and there's not a lot of interest there, not a lot of volume in that roll spot. Just some kind of erratic action. You have these kind of 3% up or down days, and that's not kind of normal action in an uptrend. If you have a smooth, nice uptrend, you don't just you're up a few weeks in a row and one day you're up 4%. It's not typical of that. So kind of more like bear market kind of action and kind of rallies and stuff like that. So and then since we're talking about shorting, I mean, you want to mind the risks first, of course, and you want to maybe go bigger, short a stock like an Apple or the mega caps, and you avoid that kind of buyout risk, or ETFs. So you spread the risk around, and because theoretically a small biotech could cure some disease, and you wake up and you're completely smoked, and the stock is double, and then you're covering up there. So you got to be careful what you're shorting, and you don't want to get into you also want to kind of incrementally get short if you're kind of building different positions, but you really want to do that. Shorting is a little different because you don't have as much time. So really at the market rolls, you want to be heavy short. And then, we already just rolled. So if you're not already heavy short, now you might be a little bit late. You're kind of like buying breakouts. If you buy the last ones to break out, those are the laggards. You want to get the first movers, and you want to get fast movers too. You want to look at stuff, if you can, like a Tesla or Nvidia or something like that. Something that's really going to move, versus a staple. And I got the staples chart up here. And then looking back to May, I'm seeing this on the 50-day moving average. I was saying that this is, probably going to break, because this is not how a market bottoms typically, in my opinion. When you have the safety trade, you're perfectly safe. It was kind of not damaged at all. And it's almost a, overall pretty decent looking base sitting there. And then it washed out, and now it's struggling. So, another washout here would be normal action to establish that bottom. So another thing to look at is, how are the breakouts acting? And, this is an actual trade I did, and, took a little profit, and, you really get no moves. You don't really have a lot of time to take your profits in this market on the end of the roll, as it kind of, some of these stocks shot up and just take a little profit, and then you get stopped even. And that's all you're going to get out of something like that. This kind of end of the run action is what I marked on there. Same with LMT. Pretty perfect base here, a nice little undercut on the end and tight action. It's got that VCP to it with the average true range contract. I don't have that on the chart for some reason, but overall this kind of diagonal broke with the horizontal. Everything worked out, and boom, just back to the even buy point. And that's when I'm making my notes, when I'm saying you're going back to even, you're taking a little profit in the top, and back to even. You're sizing down. It looks like we're in the roll at that point already, when you can't get anything to work when you're buying it perfect, and you're finding a dead volume spot and exploding out of that and everything else that's in this chart. This is its own signal. When I can't get these stocks to dance, then we're you're leaving the party since no one wants to dance, right? If you're at the dance party. So if you think about it that way, that's what's happening here. Is ATI is also doesn't want to dance. This one, we're watching this one in here, and didn't buy this last one. Got messed up in this one early and then got out, but this one just doesn't want to go, didn't have the juice, and that's at the end of the roll, just something hanging in there. And anyway, so we're here for the short, so let's get into that. So
hey, Leif,
CSCO,
really quick,
yeah, go ahead.
I like just to summarize kind of the market conditions that you were looking for. So the three things that I heard from that, and correct me if I'm wrong. Number one, you want the general market kind of starting to get into its own downtrend. And you can kind of notice that from the number of stocks participating in the rally, the market breadth, as you were showing, with the number of stocks over the 200-day moving average declining. So the probability that you're going to catch a winner on the upside with the market breadth declining gets lower and lower. So now you have to start looking on the other side, right?
Right. Another thing too is you have to understand that markets just don't go straight down. When I'm short, and I'll show you an IWO short, I'm going to cover and buy when it goes down to those extreme lows. So, that if you're managing a lot of money, you're going to be, moving the market eventually. If you're a big fund or something like that, and those funds are covering down here and creating this bounce, a lot of times that's just, a seller exhaustion mixed with short covering and a little bit of, maybe some hope, right? And then people make these little bounces, because it's not a black swan market. You're going to have this kind of choppy, bouncy action. So.
Right. And then the last thing that you just covered was breakouts. When they start failing quickly, or if perfect setups are just immediately getting spiked, that's just another kind of layer of probability that you can put that this market's not right. We're probably heading to the downside there.
Yeah, there's a lot of layers to the probabilities here, and you can only throw a little more probability on something just start to put the odds to the downside, when you start to see the signals, and then you have to have the feel and the setups there, and it all has to kind of match. And there's, I think I'm leaving out plenty, but no, this is the general kind of starting point.
Yeah, no, I think that was perfect. Just wanted to give the viewers a summarized point there. So yeah, go ahead with some of the charts here.
Well, okay, so some of the short setups that I get into, and I didn't invent shorting or anything. I don't know if I do it exactly like anyone else, but there are books so you can, what's the book? Selling Stocks Short or something with William O'Neill and Gil Morales, and he kind of does a lot in shorting. But basically you're kind of flipping the breakout upside down, kind of buying it or selling it short to the other side. And one of the patterns I would say is kind of crawling under the moving average and not able to kind of break that moving average and crawling up a moving average. And you got to time your roll with kind of the market rolling over too. And at this point, the market kind of rolled over, and CSCO just kind of dragged this 200-day. So went short there and covered into this area here, because I knew we were going into earnings too, and I don't like to hold into earnings. They might come out and say they invented something that's crazy and is going to double the stock. So I tend to want to get out on the short side before earnings, or get short after earnings, so I don't have to deal with that. Where they're kind of holding on to something for earnings to bounce the stock. But one of my favorite setups is this. Well, that's maybe the next one. This chart has multiple setups on it actually, so it's kind of interesting. But yeah, timing this kind of break when it's crawling the moving average with the market is key. Because there's a lot of breaks here that didn't work. If you kind of go back and look at the way it's crawling the 200-day, timing it right with the market rolling is key. So. Let's get to another one here. So another way to look at it too is like, you have this PANW just kind of crawling up this moving average, kind of popping it, which I like to see too. It kind of runs all the stops on the short. So if you're short in here, everyone's going to give up over the 200-day, especially they pop that wick out there. And then you have that quick roll. So you just, as that rolls below the prior bar there, you're getting short right below that 200-day moving average. And, that's a pretty good risk reward trade with the market rolling over. And very little buying interest here, and the very average true range tightening up in here and stuff like that. So as it's at the 200-day, these up volume bars here are on very little interest, as volume wise. Okay, so and they stop kind of moving around, so a little bit of price acceptance, and then a market break will kind of throw this one out. So that's a good risk reward short. If I took that short there, the move, where's that? Maybe 522 in that area there. I'd probably stop above the prior bar, at least maybe all of it or half of it, and then maybe a couple % higher, something like that. See if it works, and and then you easily get multiples of your risk, maybe even already. Maybe you got at least one risk multiple to the downside. I want to cover a little bit, move some stop to even, for example, depending on how aggressive you want to run it, and go on to the next trade. So another setup on the same chart, and I tend to go back to ones that I did correctly before, out of comfort or habit, or just because I know maybe I'm in tune or in step with the feel of the stock and the way it trades. This is one thing to do. So I'm back to CSCO again. One of my favorite setups is this kind of earnings disaster, this kind of gap, right? And then what I call sort of a no reason bounce and roll, market bounce and roll. Market kind of bounces it, and then you have some heavy selling bars up here. Very tight action. So the average true range kind of tightening up here, and then breaking with the market and looking at the other stocks in context and seeing what correlates with this stock. ANET, JNPR, these stocks are heavily correlated with CSCO. So as they're kind of breaking, that's giving me the clue that the group is weak, and then maybe that this one's a target for lower prices. So FTNT, another one of these kind of. Let's see, I want to call this another one here. Let's see. So it's just a basic bounce and roll into the moving averages. And I call this kind of a shake up instead of a shake out, because you start to get sort of a pivot. I mean, this is just a quick example. It's not maybe the best textbook pivot here, but just imagine that this is this little pivot here to the right. And you have this little wick kind of popping the highs there and running all the stops on the shorts. You're having the resistance on the 200. And some people might short there, but I'm shorting as it slides below that prior low. And this one kind of opened near the high and pushed lower, which is another method you want to use, kind of something like opens on the low and pushes up higher. you kind of the opposite for shorting. You want an opening on the high and pushing through your buy point, but this kind of opened right at the low there of the prior bar. So you get the idea, but average true range tightened up, kind of bounced back into this, kind of wedged up here a little bit too. RS line is something to look at too versus the S&P, just kind of sideways there. Nothing, you really want to see that weak ideally, but it's just an example of this kind of shake up instead of shake out. And so that's a setup we're looking for, kind of popping that pivot high. Even MGM has this. Before I even get into what I'm doing with this one, as you see here, this 36 level, this is this kind of shake up here. It kind of pops that high and then runs all maybe the shorts out, and then it has a better opportunity to roll when you finally take out the high of that kind of roll spot. And maybe, I wouldn't say pivot high, maybe roll, but kind of pivot roll high spot. Basically, it's a little combination setup here as you have. And then I said too, look, I mean, this is a breakout watch back to the left, and now it crawls the moving average enough. And we were at the pool and I was having $50 rum and cokes, and I don't know if that's gonna be sustainable, the prices over there. And I think the inflation is really catching up to this business, and people are gonna probably go out after COVID, but maybe tighten up now. And then so the earnings were pretty good, but then it just decided it didn't want to go anywhere. So this kind of went sideways and rolled, and I just decided. I get aggressive with the earnings pivots, and this one I actually took inside as it kind of opened on the high, and then just touched up very quickly, very slight, right off the open, went up a few ticks there, and then just tanked. So as it went up and came back through, I'm just shorting that, because they're not accepting this, and with the group rolling and everything else, this just went 20% plus to the downside. And offered up another roll. Go ahead.
When good news comes out on a stock and it doesn't move to the upside, what other good news can be priced in to get the stock moving higher? So I like that you pointed that out, that earnings came out, seemed good, no movement on it. That means there's more likely chance to the downside.
Well, somebody's in there trying to get out of there real big, they say, oh, I'm not into this. There's something, either they saw something they don't like in the future or what, I don't even know. I'm just judging the reaction, almost like you're sitting at a poker table and trying to see if someone's, bluffing or whatever. And we're judging this to see which way it wants to go. And it's living below the 200 and then the 50 and then the 21, and then it's shortable. So ideally you want to take that, the right way through a prior low, but this one it's one of my more recent ones. And, so we're just showing this one. So, it's one I typically don't go inside, but it's got to take out a prior high or low before I'm trading something. So anyway, okay, so let's do the head and shoulders setup. Everybody knows the head and shoulders, and back here with Tesla, anything that's got the sort of the spirit of a head and shoulders, mini head and shoulders, something like that. You can draw a line across the bottom and a break. I'm looking at that. This one, I did take this short, didn't get much juice out of this one. It was a bounce and roll in 200. Got 2R and then, probably stopped on the rest, but you got to be faster with some of these shorts, and it's all, how the market reacts and how much it's going to sell this one off. I mean, it's just kind of a fast moving market stock, and the market kind of bounced from there, and, you just cover even, and then you're back to it. And Tesla is a big enough company that they're not likely to get bought. It could happen, but, so that's for some relative safety there. Same with MGM. They're pretty big. And ETFs for safety also is the way to go. Okay, so for a little stage analysis, we have IWO up here. This is an actual short that I did, and Stan Weinstein is a kind of godfather of stage analysis, or however you want to call it. The stage 2 uptrend, stage 3, and you really want to catch these moves from the stage 3 to stage 4 decline. And actually, gold just come to mind in the weekly. Sort of looks like this too. You kind of have this false breakout. So from false moves come fast moves, they say, right? And I don't know who says that, though. It's not my quote, but that's the thinking. And this thing kind of rolls over, and then you want to catch, some kind of a short spot. The first bounce was a little bit tight and sloppy. The second one was a little neater. And I think you could probably track the volume to sort of light at the top of the roll. Not a lot of interest to the upside there after all this selling. And then you're going to get that roll when you kind of come up against the 50-day moving average, or at least near it. But in context with the start of the year and everything breaking. That's just, the underlying stocks we're looking at. That's a good roll point, good risk reward. You put your stop above that pivot high, all of it or at least half of it, maybe widen out a little bit. But I think I caught about 20% or so on this one overall. Maybe took a little bit of profit on the way down and closed it out, and actually took this again up in somewhere in this roll and maybe got 10% for partial of it and stopped even as this got pretty choppy. And it's kind of indicative of the whole year, and you got to be a little faster. And we're trend followers, want to catch a big move, and we don't want to sell 2% pops and stuff like that. That's not a good risk reward when you're risking 5 to make 2. That the math doesn't add up, especially if you're under 50% win rate in a choppy environment, which is typical, of course. So a couple extra little setups here that I was looking at. These were all on my watch. SEAS, SeaWorld, little bounce and roll, very tight. The average true range dropping out, get that little tight action to get the market to roll with it. What else do we have here? So LYV. So sort of all these reopening trades and MGM. They're all sort of targets for short sellers. And Expedia kind of bounced and rolled. And when you kind of undercut those prior levels there, and once you can't see you're shorting the right stock when you can't see it anymore behind the volume bars, you got to separate the volume off the chart there. I just typed the symbol in for this. It's not marked up or anything. I didn't separate it, but these are cover points. You kind of go below the prior lows. They kind of people might cover there and balance it. So, and you want to cover at the basic spots, the moving averages, the undercuts, extensions, like selling into strength to the upside. You want to cover and you want to buy into the downside, into extreme depths. You get a bar like back here. You want to cover some into that and kind of bounce it, right? You get too much too quick, you're gonna they're gonna bounce you out there. So and one of the things I look for a market bottom, and you look for that VIX blow off and kind of determine extreme panic. And I've been through 2 of them. You get 280 VIXs before in this 2008 and 2020. Personally, I'm comfortable in investing in long-term money in there, but you're not probably those are not likely events. So you have to determine if things are forming up and things are improving, and you have the Fed. Don't fight the Fed. You have to have the Fed behind you too, and the Fed's got to tame this inflation apparently. So the short side is maybe the right side at the moment. So we'll see.
Yeah, when I reached out to Leif, it was about the perfect time to start building into some short positions, and then we're filming this on Friday. We're a day or two too late for all these.
Yeah,
setups.
you knew, and now you were asking. I think I even told you a few of the shorts we're looking at, and they all worked. I mean, almost everything we put onto the short side is like way in the money. Now we're a little bit late, and we're gonna have to play the next kind of roll, or kind of bounce and roll or something, or maybe we get some sideways action and get some more setups, and we'll see. But you really want to attack the short side as the market breaks, and you have to be sort of aggressive to get the best shorts at the right time. And it's not like buying breakouts in an easy uptrend. The market kind of breaks, and you got to be ready. And then as it's breaking, and a couple of days to the downside, and now it's like buying a stock extended if you flip it around. So just a couple things. Hopefully, the safety about the bigger stocks, short the bigger stocks, look at ETFs. That's kind of key, and you don't have to short at all. So don't forget that.
Right.
A lot of the money is made to the upside. I didn't win the U.S. Investing Championship shorting stocks. So that's definitely key. But I like to juice my returns in a bad market with shorts, and fed some pretty decent ones. So and you want to be your biggest when you get it right, and it's breaking your way. And as it's going against you, you're getting out, and you got a contest style trade this stuff. And if you really want to be aggressive to short side, you kind of have to do it all at once. And, you have to see all the good setups, short something quickly, move a stop to even, take a little bit of profit, get the feel for it and get everything short. And then move on to other positions and get some size on there. And hopefully you have some kind of a trend. I mean, if they just keep bouncing this choppy thing around, it's going to be hard to make any money short, but we'll see. I mean, we'll see how it goes. But for now, we have another bounce and roll right under this head and shoulders type of base in an overall market. So, and you see that the overall health is just not good. So we'll see who wants to bottom, and if things start setting up long, you got to stay positive, because things will set up long. Keep your account intact. mind your signal. If it's, you know, you don't want to position size accordingly. You don't want to be max margin short in some biotechs. You'll get completely blown up potentially. So you want to be smart about your risk management, and that's the risk first. It's not, you know, we're not cowboy trading. I mean, we're always managing our risk and stuff, and looking at, you know, how much downside we have almost first before we worry about, you know, the upside to the downside.
Because the bear market rallies are the most vicious type of rallies. You were pointing it out earlier with like the up 3%, down 3% kind of days.
Yeah.
So we're not going to have unlimited upside like we do when we go long. So one thing that you've talked about multiple times through here, just want to highlight this for kind of new traders, is you have to act quicker. You don't have the super high expectations of this is going to be a 100% gain. No, that means the stock goes to zero. So really moving your stop to even, like Leif was saying, is going to keep you out of that the downside risk when you short.
Yeah, absolutely. And yeah, just safety first, and you know, but you can't get that much out of it. They can only go to zero, and they're not going to zero. I mean, you know, Cisco or MGM, these are not going to zero. You're just getting a market, you know, sell off, and you get a squeeze on them, and you get some repricing temporarily, and in the long run, they'll probably be higher, a lot of those stocks. So, you know, you gotta take it when you can, and be faster. And if you're late, like you said with the bounces, if you know, you're down 5%, another 5% on the market, so you're down 10%, and then you start shorting, that you could have your 4% up day, and now you're smoked. So that's why I'm very keyed in on, with the market break, that's the time to short. Otherwise, forget it. You're probably going to get smoked.
Yeah. In a bear market, it's about how little you can lose, especially for new traders. Like I'm putting myself in that category. Like if I can just kind of avoid losing money while we go through this, that's a win.
Yeah, you're going to come back stronger, and everybody that's buying, you know, bases under the 200-day moving average and stuff like that, and you know, because that's all there's left. You know, that's not our style, but they're taking kind of tight patterns and buying them under the moving average, and they're just getting sold to by the bag holders above and getting frustrated and chopped up. And then you won't be ready for the next real bull when everything sets up and breakouts on the, you know, tight action on the right side of bases, and they move out, and you have easy trends, and you're selling into strength, and, you know, buying the next bases on other leaders, and moving back into the same stocks and attacking them multiple times and compounding your account. And that's what I really love to do. But, you know, we did this short thing. I think it was a good idea at the right time. So I hope it works out.
All right, Leif, big thanks to coming on the channel and teaching us how to short in this market. Where can people who maybe haven't heard of you, where can they follow and learn from you?
Well, Leif Soreide on Twitter. That's kind of I'll do a couple posts on there. And, you know, I was just saying recently too, that, you know, a lot of doors were getting shut on us, you know, and that was kind of this signal. I'm trying to give some hints, and hopefully people that don't see it that way and always optimistic have to understand your marine shippers get closed out on you, and then this other group gets closed on you. And, you know, so I'll put some stuff like that on Twitter, but Champion Team Trading is my sort of newsletter service where we put up all kinds of stock ideas, and you know, with other team members, and we work on setups, and have, like, you know, a lot of activity on there about, you know, how to trade all this stuff and what's actually working. And it kind of in a bad environment, like I've always loved the newsletter services, because you kind of see, you know, what's working. And if it's not a great long environment, then you don't have to be so engaged if you have kind of a good platform to kind of back you up and just kind of keep you current with what's going on. You know, that's usually worth it. So find a good newsletter service versus staring at the screen all day, especially in a down market. And that's kind of the time that people are not engaged. And that's the time you really want someone else to do the work, because, you know, you say, well, this is just, you know, it's not worth it right now. So we'll say, okay, well, what are they saying? It's still no good. Okay, well, you know, kind of get your timing a little better, and not stare at the screen all day is a kind of a good move. So I've always enjoyed those services. So.
Yep. And I'll link that in the description below. So if you guys want to try that out, just head on down to the description and the comment section of this video. And finally, if you guys enjoyed the video, please leave a like and subscribe to my channel. If there are any other traders that you want me to have on, leave it in the comments and I'll reach out to them. Have a great weekend, and I'll see you guys later.
Thanks a lot, Nick. Bye, everybody.